Welcome learners to our ordinary level principles of accounting lesson 5. I want to introduce myself to you. My name is Mr. Rutanira from Rendaus College in Zengeza. Today we are focusing on a very important subject, which is cash. Cash, as you know from our previous lessons, it is an asset. We have two types of assets, a non-current asset and a current asset. Cash falls under non-current assets. Right, we have objectives for this lesson. 1. Learners are to define what a cash book is. You must know what a cash book is, because this is a book which records the cash. 2. Learners are to make entries in the single column, double column, and 3-column cash book. Making entries in the cash book is very important, especially to you, the learner of principles of accounting. At the end of the period, the cash book is balanced off. The end of a period is normally the month end. So you must be able to balance off an account. Right, let's focus on the definition of a cash book. A cash book is a book that is used to record cash transactions only. From the name, you can see that this is a book to record cash. Any other transactions which do not relate to cash, they are not recorded in the cash book. There are 3 classes of a cash book. 1, a single column cash book. 2, a double column cash book. And thirdly, a 3-column cash book. So in our lesson, we are going to focus on how we make entries in these 3 types of cash books. Right, let's focus firstly on the receipts and payment side. A cash book is made up of 2 sides, the left side and the right side. And from our previous lessons, you understand that the left side is the debit side and the right side is the credit side. The left side is the receipt side. The receipt side, from the name, is the money that is coming into the cash book or into the organization. The payment side, which is the credit side, is the payment side, which is used to put cash out of the business. So, what sort of money comes into the business? Money comes from customers. When we make sales to customers, these we refer to them as cash sales. When these customers, sometimes these customers, they buy goods on credit, but the cash book is only effective when that account is being settled. You settle that account with cash. If you have invested in land and buildings, you can get your money from tenants. This money is referred in accounting as rent. So this rent that is received is debited on the left side of the cash book. From other investments, you might get your interest and dividends received. So the dividend received from those we have, from whom we have invested in, is also recorded on the debit side. We can also sell our assets. Our assets, especially the non-current assets. From the sale of those non-current assets, you receive money, and this money is entered in the cash book. For the payment side, which is the credit side, this is amount of money that is coming out of the business. This money goes to the suppliers, those who would have supplied us with the goods. It could be on cash, or maybe we might have bought goods from creditors. And then when we are now settling the account, we have to credit the cash book. For all the expenses, you know all the expenses that a business might incur. It could be rent, salaries, electricity, and all the other expenses, especially if they are on cash basis. we record them on the credit side. Just like we receive money after making an investment. When we are making that investment, we need to pay interest. We need to pay the dividends. We also need to purchase assets. And when we are purchasing assets on cash, we make these payments on the credit side of the cash book. So you can see from this cash book that this cash book comprises the debit and the credit side. And from our foundation principle, debit the receiver and credit the giver. This principle will always be binding. Let's continue and look at the balancing of an account. Right. I have this illustration on the board. The following transactions relate to the books of J. Moyo in the year of 2020 in the month of January. What happened? These are the transactions. On the 1st of January, he started his business with a capital of 200,000 cash. On January 2, he purchased goods on cash for 160. On January 7, he sold the goods. And then on January 11, he sold goods again for cash. So from these transactions, you can actually see that there is money that came into the business and there's also money that went out of the business. We can illustrate this simply by putting this information in a single column cash book. What I have done here is I have drawn a single column cash book. Right. As I have said when I was introducing this lesson, this is the debit side, the left side, and this is the credit side, the payment side. So this transaction on 1 January is the cash that was used to start a business, and this is the capital. So on the details column, we write capital, and then on the cash column, we write the amount of money. Those sales, as we highlighted, when we make sales, we receive money, and from this transaction on the 7th, we see that we received 35,000, just like the amount of money which we received on the 11th, which is 45,000. On the other side, where we record the payments, these are the payments that were made by the business. Payments, as we said, purchases are payments. So we made payments of 160. So we have recorded all the transactions that took place. But what happens now is we balance off the account. So we are going to look at all the money that got into the business, which is 280, and all the money that went out of the business, which is 160. How much remains in the cash account is 160. So that is how we balance the account. So from this account, we have balanced the account. Learners, we can break for now. When we meet in the second segment, we shall be looking at the 2-column cash book. Thank you. Welcome back to our second segment. In the first segment, we focused on the single column cash book, and we ended by balancing off that single column cash book. Before we proceed to the 2-column cash book, we want to post the transactions into the ledger. You remember from the cash book, there was capital of 200, which was recorded on the debit side. Now when we are posting onto the ledger, there is double entry of this capital, which is 200,000. So this is the only amount which we got from the capital account. The capital account is credited because it is the one that gave 200,000. We balance off this 200,000 at the end of the month, and the balance due of 200 is brought down on February 1 as 200,000. So this is also part of balancing off the capital account. There was also the purchases account. We said that the purchases account is an expense account, And from the cash book, you remember, it was recorded on the credit side. But in the purchase account, the corresponding entry is the 160 on the debit side on January 2. We also balance off this account to 160,000. We see on 31st January, the balance of 160,000 is taken into the following month as $160,000. Sales account. Sales account was recorded in the cash book on the debit side. But when now it is being recorded in the sales account in the ledger, it is recorded on the credit side. This is to respect the double entry rule of making entries. That cash which was on the debit side in the cash book is now recorded on the credit side. On 7 January is 35,000. On 11 January is 45,000. If we were to make a sum of this month, we see that it is 80,000. And as we move into the following month, we carry over the 80,000 into February 1 is 80,000, which is the balance brought down. So this is how we make entries into the cash book, and then we post them into the ledgers. So we are done with the single column cash book. What we have done is we have made entries into the cash book and then posted those entries into the ledger. Now let's focus on the double column cash book. Double simply means two. So when we say double column cash book, it is now different from the first cash book that we looked at, which was just a single column. This one is two columns. From the definition, this cash book has two columns, one for recording cash and the other to record bank transactions. Just like the single column cash book, cash received is debited in the column and cash expended is credited in the cash columns. The checks received are debited in the bank column, while the checks issued are credited in the bank column. So basically, with a double column cash book, there are two columns, one for cash and the other for bank. The checks that are received or that are expended, they are entered in the bank column, and the cash received or cash payments made, they are recorded in the cash column. Let's see the illustration. Right, we have this illustration. Started business with capital in cash 2,000 and bank 5,000. This is the money that is used to start a business. So there is cash and bank. So with the double column cash book, a separation is made. There is a distinction between cash and bank. Right? This is the amount that started. So you would see as we make these entries into the double column cash book, how we are going to distinguish cash from bank. There were cash purchases of 1,200. There was a check which was received. So this check, you see how we are going to make the entry for 4,100. There was equipment bought using a check. There was money that was withdrawn from the bank for business use. And there was also cash sales of 3,300. I'm sure now we are beginning to appreciate how we are going to make these entries, especially basing on what we have looked at in the single column cash book. Let's look at the two column cash book. On the board, I have made a rough sketch of a two column cash book. This one is not very different from the single column cash book. It is the debit side and the credit side. But of particular note is the column for cash and the bank. The column for cash and for bank. You remember he started business with a capital of 2,000 and bank 5,000. So this distinction is clearly made that in the cash column you record the 2,000 and on the bank column 5,000. So whenever you read the statement check, you know it's bank. Hassan is a debtor. Now he is paying. As he is paying by check, we record in the bank column. And then, before I go to this contra end, let's look at the purchases. Purchases, as we have said, in the single column, it is a payment. It was a cash payment. We record it under cash. The equipment which was bought on the 7th of January, we record it under bank. Right. Now, let's look at this entry. You can see there is 800 on the credit side and 800 on the debit side, and there is this C. This account is referred to as the contra entry. I want to explain what a contra entry is. What happened here was there was cash which was taken out from the bank, and this money was used for business purposes. So what actually happened is the money was taken out of bank. As we have said that the credit side, this is the money that is coming out of the bank, but the same amount of money was deposited into the cash till. So you see that this cash on the credit side, it is under the bank column, but on the debit side, it is under the cash column. This is what we call the cash, the contra entry, and we have to make a distinction by writing this C in capital letters. Let me just explain how we record the contra entry. A contra entry is a transaction that is both debited and credited on the same cash book. Cash is withdrawn from the business bank account for business or office use. 2, cash is taken from the till and deposited into the bank account. So it goes in 2 ways. It's either cash is taken from the bank and put it in the business, or cash is taken from the cash account and deposited into the bank. Boys and girls, learners from who are viewing us from there, we have looked at the contra entry and the double entry. In the next segment, we are going to focus on the 3-column cash flow. Thank you. Welcome to our third and last segment of our cash book. Right, we have looked at the single column cash book, the double column cash book. Now, let's look at the 3-column cash book. I'm sure you would appreciate that 3-column cash book, from the name itself, it has 3 columns. What is the 3-column cash book? This cash book has 3 columns: the cash, the bank, and one column which we have not talked about, the discount column. So this is very important. We have the discounts allowed and the discounts received. You would find the discounts allowed on the debit side of the cash book and the discounts received on the credit side of the cash book. Some of you might want to know what discount allowed is and what discount received is. Discount allowed is an expense and discount received is income. How? Discount allowed is money that is allowed by the business to the creditors to whom we will have sold goods on credit because they will have paid these goods promptly. Let me give you an example. You sell your goods for $400 and then you offer some discounts to your customers so that they pay promptly. You might say, I'm going to give you a discount of $50. So when this customer is coming to settle their account, he is going to pay $350 instead of $450. Now, with this 3-column cash book, the $50 is going to be recorded under discount allowed. And then vice versa, the discount received. This is the money that we receive from our creditors because we also pay promptly. For example, you purchase goods on credit for $1,000 and then you are allowed a discount of $100. So what it means is when you manage to pay within the stipulated time, you pay something like $900. So from your purchases of $1,000, we subtract the $900 that you actually pay. The $100, the remaining is the discount received. It is income to you because instead of paying the $1,000, you are now going to pay $100. Let's illustrate this. I have an illustration here. We have Jane Moyo, a sole trader who keeps full double entry accounting records, including a 3-column cash book. All checks received are banked on the same day. Right. What happened? On 1 January 2020, balances in his books included the following. Right. There were debtors of 1,000, who was M. Joyce. Creditors, there was Ruth, 500. Cash and bank. I'm sure now you understand cash and bank. So these are the balances on the first day of the month. We continue. During the month, Moyo had the following transactions. On January 2, he paid the amount he owed by check after deducting cash discount of $50. We see there is a discount there. And then on the 6th day, there was cash withdrawn from the bank for office use. We have already talked about this as contra entry. And then on the 9th, he paid J. Ruth by check after deducting $30 cash discount. And then on day 30, he paid salaries in cash. So these are the transactions. We want to illustrate this on our 3-column cash book. Right? When we are doing this 3-column cash book, we can see now there is an added column, which is the discount, the cash, and the bank. Also, on the credit side, we have the discount, the cash, and the bank. Now, the balance BD, these are the balances on the beginning of the month. Right, what happened on the 2nd day of January? We see that Jones paid $950 by check. We recorded it under bank, but there was a discount of $50. So that is why we record this discount under 50. And then this $400, from our previous explanation, this is the contra end. We also find it there. We have already talked about it. Right, let's look at J. Ruth. We have J. Ruth, to whom we paid $470, but the discount was $30. So looking at this, we can see that the discount column, we add the totals, is just 30, and the discount allowed is 50. Cash, we have balanced it. We have already looked at how we balance the cash and how we balance the bank and how we balance the cash. This is the balance CD, which is taken over into the month of February, on the 1st of February. So for cash, the balance is 200, and for bank is 3,180. But mind, the discount allowed, we just take the totals only. We don't balance. So the purpose of the 3-column cash book is just to record the totals of the discounts. So on the debit side, the totals are 50, and on the credit side, the totals are 50. These ones, remember, they are not carried, they are not brought down into the following month. Just like what we have done, we need to post this into the following month and into the ledger. Right? I have a short revision exercise for you, just to test whether you have mastered how we make entries into the different cash books. Write a 2-column cash book for J. Moyo from the following details and balances off at the end of the month. These are the transactions of J. Moyo, a retailer. He started business with capital in cash 4,000 and bank 8,000. I'm sure you understood that capital, this is the money that is used to start a business. So on the 1st of March, you know how we record the cash. The cash, we record it under the cash column, and the bank, we record it under the bank column on the debit side of the cash book. Right, on the 3rd month, on the 3rd day of the month, there were cash purchases, 3,000. When we are purchasing, this is a payment, this is an expense. And from our cash book knowledge, we know that the payment side is the credit side. Hence, this 3,000 is going to be recorded on the credit side of the 2-column cash book under the cash column. Right, on day 4, we received a check from Farai, 5,500. This is money that is coming into the business from a debtor who is called Farai. Because this money is coming as a check, you know it is going to be recorded under the bank column. We have also other transactions. Bought a motor vehicle using a check, recorded under the payment side, under the check. We withdrew 800 from the bank. This is, you know, a contra entry. Cash sales, you know, this is money that is receipted and paid Chirasha by check. This is money that was paid out under bank column. So learners, I'm sure you appreciate that we have ways of recording the cash, either in a single column, double column, and 3 column. And I'm sure you have mastered how to make entries. Thank you. See you again.